Let's talk about the magic of tier one business credit vendors. Look, if you're going to look to build business credit for your EIN without a personal guarantee, without consumer credit check, then you need to know about tier one vendors. They're one of the most important keys to this process. It's what starts your business credit profile, starts your business credit score, and it's what gives you the foundation to be able to get all types of credit beyond these starter vendors without a personal guarantee and credit check. So you've got to start here when it comes to business credit building. And in this training, we're going to break down business credit vendors. We're going to talk about tier one vendors, who they are, what they do, how they can help you, multiple different benefits you don't even think about on how you can actually use them, especially with inflation and supply chain issues, how you can use these to solve those problems, as well as building a business credit profile and score that helps your business fund itself. So we got a lot to cover today. Let's dive in. So when you're building business credit, it can kind of be related to like a cake, right? If you're building a cake, then there's all kinds of ingredients that you've got to have to build that, right? Or to make that. But it's the same with business credit building. There's multiple different ingredients involved that if you get them right, it comes out to be delicious and beautiful. But if you get it wrong, well, then it ends up being a disaster, right? Which costs you a lot of time and doesn't give you the end result that you want. So you've got to follow the right order, just like if you're making food, baking something, you've got to follow the right order in order to be able to actually succeed and get the end result that you really want to get. It becomes very, very important to be able to do so. So how do you find the recipe for business credit building? Well, that's exactly what we're going to talk about. As a matter of fact, there's 7 steps to this process. We have them mapped out in a system we call our business finance suite. And in this business finance suite that helps you get credit and financing, we have a 7-step process that helps you build business credit. And oftentimes, I don't give you step 1, 2, 3, 4, 5, 6, 7 in these trainings, but what I do is individually talk to you about the different steps. And today, what we're going to do is we're going to talk about starting with step 3, because step 1 is really building your fundability, which I've talked a lot about. There's a lot of training on youtube.com/credit suite that can help you. And on top of that, then you got to get set up with reporting agencies, which is really part of fundability as well. We talk a lot about that on these trainings. But today we're going to talk about the 3rd step. We're going to talk about now how to start building a business credit profile and score. We call these tier 1 vendors to our clients. That's how they know them, as tier 1 vendors. We oftentimes, when we're talking just in general education about them, as starter vendors, because they're ones that are actually used to start building business credit profile and score. Now, these vendors lay the groundwork to build that business credit profile, to build that business credit score. And once that happens, then you can move to other type of vendors that can actually help you build your business, including advanced vendors who don't even really report to the reporting agencies, but they'll still give you credit based on your established business credit profile and score. I oftentimes describe this 3 different ways, is that if you're going to build an initial business credit profile and score, here's how it works. You get accounts that report to the reporting agencies. Now, I oftentimes call these trade lines. That's the lending, credit issuing specific reference for the term. And often they're called payment experiences, which is the reporting of a credit to a reporting agency. So you've got to start with these trade lines, getting credit with credit issuers who report. Once they report, that establishes a credit profile, and then you can get a credit score. And with this trifecta, trade lines that give you a profile, that give you a score, then you have a foundation, which actually goes a long way to help you get loans and credit lines, but it's also the foundation you need to build off of to start getting all kinds of other revolving credit without the personal guarantee and without the personal credit check. So if you don't mind, I always like to say hello. So tell me where you're tuning in from. I always like to see the state, the city that you're tuning in from, even the country. A lot of people are coming in from other countries. So I'd love to give you a shout out. If you don't mind, go to the chat and just say, hey, I'm from Nashville, Tennessee, or wherever it is you may be from, so I can give you a shout out. So what makes a vendor tier 1 vendor, a business credit tier 1 vendor? Well, these are usually companies that don't specialize in extending credit, like banks and other financial institutions. So credit card issuers like American Express, banks like Bank of America, look, they specialize in extending credit and financing to consumers, to business owners. But tier 1 vendors typically don't do that. What they're typically doing is they're just businesses that sell whatever products and services they sell, and then they give customers the ability to buy those things on terms, to pay through time. So they give people 30 days to pay, or 15 or 60 or 90 days to pay. So these vendors, starter vendors or tier 1 vendors, are really everywhere out there. I mean, they could be your local lumber store that lets you come in and buy lumber and not pay them back for a month or 2 months. It could be a local roofing contracting supply stores where if you're a roofer, you can go in and buy all those roofing supplies on terms and they give you 30, 60, 90 days to pay. So if you think about these, for example, they're for common sense reasons. So let's say we've got a roofing store that sells roofing supplies and they give their clients 30 days to pay them on terms. Well, that makes sense because if I'm a roofer, I'm going to go get the supplies. I'm going to roof somebody's house. Then I'm going to get paid after the work is done. That's typically the flow of how you get paid. The problem is I got to come out of pocket with my supplies for the roofing. I got to be able to pay my payroll and pay the people that are going to do the roofing all before I ever get paid. So it creates this cash crunch with businesses where they got to buy the supplies, they got to pay for the labor to deliver the product, but they don't get paid on the product delivery until after the work is done. So it creates cash flow issues because they come out of pocket with the money to be able to produce the product, in this case, roof the house, before they ever get paid. So that's why all these vendors exist in the world that offer credit terms, because they know that a lot of the people that are buying their stuff don't get paid till a point in the future. So they're extending terms to make it easier for their customers to do business with them. Okay. So same with Credit Suite, right? We have our customers pay us on terms and give them months to pay because that way it helps more of our customers afford to pay. Helps more of our customers use the money they're getting from our system to be able to build their business. And as their business gets bigger, they make more money and have more money to pay. So a lot of these vendors are not credit issuers. They're not lenders. They're just stores. They're just people that have products and services where they extend these kind of terms to customers to make it easier for their customers to actually do business with them. And typically these terms are extended by net 15 days or 30 or 60 or 90 days, for example, giving 15, 30, 60, 90 days to pay them back. So tier one vendors, we oftentimes call starter vendors. And the reason for that is because they'll give credit to new businesses or businesses that don't have any established business credit profiles and scores. So if we look at tier 2, tier 3, tier 4, tier 5 vendors, what we see is that these vendors need you to have 3 accounts on your business credit reports, 5 accounts, 7 accounts, 10 accounts, 14 accounts before they'll give you credit. Well, starter vendors in the very beginning stage of this process, because they don't require you have other accounts on your business credit reports before they'll actually approve you, okay? They look at other factors to determine your approval, not that you have other accounts reporting on your business credit reports. So these vendors will often extend credit based on you having a strong fundable foundation, even though you don't have any established business credit. And when we talk about baking a cake and a recipe and the proper steps of that recipe, that's why fundability is so important. Because what happens in a lot of cases, and we had this conversation today with our sales team, is that, well, people come in and demand that they want money when they can't get money. But what happens in these cases is that business owners don't want to take the time to be able to follow the initial recipe of baking that cake. They're skipping steps, and then they're upset that they're not getting the result that they want to get. And you don't want to fall into that category. You have to logically look at things from a business lending perspective. Meaning, if you want to get a loan and you want to get a credit line, then, okay, well, do you have collateral? Do you have stocks, bonds, 401ks, IRAs, account receivables to offset the lender's risk, to make them feel better? Because if you default, they can have something to take back. Well, no, I don't have any collateral. Okay, nothing to make the lender feel more comfortable or credit issuer. Okay. What about cash flow? I'm a newer business. I don't have cash flow. Okay, so you don't have any proof of concept either. What about personal credit? Well, my credit's damaged. Okay, so the people that have given you credit in the past haven't been paid as agreed, and that's caused credit issues. So now if you look at this from a lender's perspective, you've got a history of not paying bills as agreed. You don't have any assets to offset their risk of giving you money. And at the same time, you don't have a proven concept for a business. You're just thinking about launching a business and getting the cash flow to actually be generated. So in this case, why would a lender want to give you money? I mean, there's no lendable strength for them to want to give you money. So if we look at it from this perspective, we say, okay, now I get it. Now I see what a credit issuer or lender sees. How do I fix that? Well, we go to the very beginning. We go to step 1. And step 1, which I'm not going to cover today, is building that fundable foundation. It's giving lenders everything they want to see to let you know you are legitimate even though you don't have business credit yet established. So we see your address as a business address, and you've got a business phone number, you've got a legit email address and a website, and maybe you got a license for your business and your bank account set up and a merchant account is set up, and all these foundational items are set up. So now lenders and credit issuers look at it and go, okay, they are a legitimate business. Then they look at your business credit. Do you have a DUNS number? Do you have a BIN number with Experian? Do you have accounts reporting to the business credit reporting agencies? Now, as you start to do this, well, now it starts to give you more and more credibility for lenders and credit issuers. But in the very, very, very beginning, starter vendors need you to have a fundable foundation for even them to even consider you. If your fundability isn't set up right, they're never going to give you approvals because all they have to look at is fundability. You don't have any business credit established. So it's why you've got to build that fundable foundation as step one. And step two is you've got to get the DUNS number and set up and establish the reporting agencies. Now we can come in and start building the credit profile and score, which is going to help us become way, way, way more lendable. So Alan, what's up? Thanks for coming in. You're saying I'm the man. I appreciate that. From Rock Hill, South Carolina. April from Oregon is in the house. And Rodkin from Chicago. Hello, Monet Valentine. What's up? Thanks for tuning in. Rhonda, hello from Atlanta. And Monet, thanks for coming in from North Carolina, as well as Cooler 675. Thanks for coming in from Chicago and saying hello. So other factors may be considered as well. So there's other factors that may be considered with some of these vendors. Time in business, revenue, okay, other types of things. So when I talk to a business owner and they say, well, I'm getting denied because I don't have enough revenue or I don't have enough time in business. Well, no, you're not getting denied because of those things. Those things are getting you denied because your foundation isn't built credible. If you build a fundable foundation, you get that fundability in line, then it overcomes a lot of these time and business requirements, a lot of these revenue requirements that lenders or credit issuers have. It's why I preach business credit building step by step. It's why I say it's like building a cake, and because like my mom's a baker, right? I was taught to bake since I was a very young age, and to be honest with you, I really liked that better than yard work. It was just a lot more fun. So I'd hang out with my mom and learn this. But what I learned is that if you don't add the right ingredients in the right order, things end up disastrous. You waste all this time and you get a really subpar result. Same thing here is that you've got to do these ingredients and put them in order. And if you skip them, then you just don't get results, meaning starter vendors won't actually approve you. So vendors that extend terms without a credit check are not the easiest to be able to find. And the other problem is that a lot of the ones that will say they're reporting, they don't report. They're actually just reporting if you go late. They're reporting negative payments, not positive payments. And you got to be careful about this. When you talk to a lender or credit insurer and say, where do you report? And they say Dun & Bradstreet, you got to ask them, well, do you report my regular payments to Dun & Bradstreet or just if I default? And you'll be surprised how many say, well, we just report if you default. Well, you're not reporting the account. You're reporting a collection. I want credit issuers that are going to give me credit and then report my timely payments to the business credit reporting agencies. And this is very important for us as business owners, and it's oftentimes overlooked because we're conditioned by consumer credit. If I go to Target and I go to buy stuff, the cashier says, would you like to apply for a Target credit card? If you do, you can save 20% on your order every time. 20%. Would you like a credit card? Would you like a credit card? When I finally say, yes, I have a $500 order, I'm like, yeah, now's the time to get that credit card. I'm going to save $100. I expect the credit card to report on the consumer credit reports. I expect that. By default, that's just something I think is going to happen. But in the business world, 97% of these vendors we've talked about, they don't report the credit to the business credit reporting agencies. They just don't report it. Okay. Now, a lot of people say, why don't more vendors report? Because it's a nightmare process to report payments to D&B Equifax Experian. I help people get the ability to report all the time, and it's a nightmare process. For example, if you're a non-bank and you're just a regular company, Dun & Bradstreet wants you to have 500 customers to even report every month before they'll even consider letting you report. Well, a lot of small business owners don't have 500 paying customers every month. They don't even fit the requirements to be able to report to the reporting agencies. And even if you did, it could be a 3 to 6 month process to get the ability to report to a reporting agency. I don't know why they make it so hard, but they make it really hard. So as a result of that, most vendors just don't report. So now you've got to get vendors that do report and vendors that will actually report your timely payments to the reporting agencies, not just these negative payments. Colin Lee, thanks for coming in from Bronx, New York. Jamie, hello from Greenville, South Carolina. And Jamie says, it hasn't started yet. Hopefully you are here now that it has started. And April says, I'm planning to get set up to report to the bureaus. You've inspired me. Great job. And this is going to give you a lot of what you need to do so. So again, not all starter vendors are going to report payments. 97% won't. So why can't you find these vendors on your own? Well, it's not impossible. You can absolutely do it. But here's the problem. In order to do it, you have to first find a community, a resource, a place that mentions the vendors. Then you got to really call everyone and try to get somebody from underwriting on the phone to really make sure that you should apply before you move forward to apply. It's realistically what you should do. Why is that? Because first of all, if you go to a group, we've got a Facebook group called Get Business Credit. And by the way, if you're getting value from this, hit the like button, hit the love button. Like I can see in real time how many people do that. I don't ask for much. If you're getting value from all this time, energy, and research we've done to give this to you, then just hit like, hit love. Go, yeah, I didn't know that. Good stuff. And then what that does is it helps us help more entrepreneurs because the social channels like YouTube then show the content to more people. So, okay, why can't you find these on your own? Well, first of all, you got to find vendors. And you got to find vendors that report. Now, we've got a Facebook group called Get Business Credit. It's the biggest group you're going to find on business credit building. There's over 50,000 people in there. And there's like 50,000 engagements every month. I mean, there's just tons of activity in there. But here's the problem. A lot of the information in there, 70% of it is misinformation. It's not correct. It's not accurate. Now, somebody once asked me, he said, Ty, why don't you correct all the misinformation? And my response was because I can't. I don't even literally have enough time in my day. If all I did was sit in this group and correct everything that was wrong, that would be 24 hours of my day. I mean, I don't even have enough hours in my day to just do that job. Because what happens is when a novice, somebody that's building business credit for themselves, gives advice that they've learned from their experience, it's from their experience. It's very subjective. It's based on their business industry. It's based on their time in business. It's based on their revenue. It's based on all these factors that's subjective and individualized to them. And so what they're telling you really did work for them, but it doesn't mean it works for everybody else. Helping over 40,000 people through this process, we've got enough communal knowledge to know in general, this is the flow. This is what works. But one person that does it for themselves, giving advice, that doesn't mean it's going to work for you. And oftentimes it won't work for you. So it's the first reason that it's hard to find vendors that report on your own, because you're going to get it by using other people's information, and what they learned might not necessarily be accurate. They might come to you and go, hey, man, I'll tell you what I did. I used Quill. Quill was how I started building business credit. You're like, great. And they're like, hey, be careful. You got to spend more than $50 a Quill to get them to report. Great. So you take that info and you go to Quill and you get the account and you spend $50 and you wait and you hear crickets, and all of a sudden 6 months, 60 days, 90 days pass and you go, why aren't they reporting? And you go to Quill and Quill says, we're not even going to report to the business credit reporting agencies until you've made 3 purchases first. Man, now what happens? You wasted 90 days of time because you took action on somebody's information. Was the information good? Yeah. Quill used to be a great starter vendor, but they no longer are. So by somebody telling you what worked in the past, now things change daily. Now that's not applicable. And you spend all this time wasted applying for a vendor that doesn't report. So you got to be careful because the information changes daily. We have a data team, and every day I get email after email after email about every bit of information in our system that's changed. Hey, this vendor just got removed from step 7. They no longer report to Equifax. Hey, this vendor now just moved to step 3. They've now made it easier for somebody to build business credit. Hey, this vendor got removed completely, and now they're in an advanced vendor stage where they can help give you credit if you have none, but they no longer report to the reporting agencies. This stuff changes daily. So there's a lot of things. The other problem is that if you go to verify and you say, okay, thank you for telling me Quill reports, I'm going to go verify that on my own. Now you pick up the phone and you call Quill and you ask them that question. Well, now you're dealing with a front-end customer service rep that doesn't know their own underwriting guidelines. They don't know the answers to what you're asking them. They're going to give you the best answer they have, but oftentimes if you call Quill and ask the same different people the same question, you'll get 2 or 3 different answers. Which one's right? So the only way you get the real information is to actually go to an underwriting source. Not easy to do. If I call Quill and say, I want to speak to your underwriter, they may give you any number of different excuses. The last one of those last week where I said, I'd like to speak to your underwriter. Okay. They said, well, sorry, you can't because it's all auto underwritten. It's a computer doing the underwriting. There's no manual people involved. And I'm like, no, it's not true. It's not. Your computers are making a lot of the decision, but you still have an underwriting team that's controlling the flow of that computer. I want to speak to that person. And if they don't give me the answer, I'll hang up and call and talk to the next person. Guess what the next person does? The next person gets me with somebody in underwriting. So again, you can't trust now the data that's being given on the front end. You got to go all the way through to get to an underwriter that's going to give you that information. Okay, so there's some problems involved with trying to get the information on your own that you should be aware of. Now, there's obviously a couple ways to do this. You can go through that process and do it on your own. Get information, get advice, go verify the information, drill down to an underwriter, make sure it's as accurate as you can, then go for and apply. But you know how much time that takes just to get one account when you need 14, 15 accounts to get to the high end of business credit building? A lot. Now, the other option is obviously you can be able to work with somebody that can help you do that, right? So, that's something where what we have a paid service for. It saves all that time. It comes through and we tell you the exact tier to apply. We tell you the exact underwriting guidelines per the underwriters because we went through and got a lot of that information. So there is a shortcut there, but you can do it on your own. You just have to keep in mind that when you're not working with somebody, it's just going to take more time for you to verify the information is correct. So what really happens? What really happens when people build business credit is if they're doing it on their own, they don't do anything of what I've told you. They don't work with us to help quickly get through the process. And they also don't verify the information I'm telling you needs to be verified. They just take whatever advice they can get and they go move forward on that advice. These are the people that, for the most part, abandon the process of business credit building and think it doesn't work because they followed bad advice. They didn't verify it. They skipped steps like fundability and set up with reporting agencies. Then they go in to start to apply and any number of different things happen. They get vendors that won't approve them. They get denied. They get vendors that do approve them that don't report and wait months to realize they don't report. Any number of other problems occur. But what happens is it takes this process, which could be 6 months, and it makes it 2 to 3 years. If you even do it, most people just give up and abandon because they're like, okay, I was told X and it didn't work, so I guess this doesn't work. So keep in mind of these pitfalls, these landmines you're going to run into. If you're doing it on your own, you got to expect to go through a process and it take a long time to do it the right way. But if you do it the wrong way, it's a lot of frustration because you apply denied, apply approved. Account doesn't report. Now I got to call Dun & Bradstreet and call Quill and find out why they didn't report. And oh my gosh, I'm 3 hours in and realized, they didn't report. They're the wrong vendor. Now I got to go and know the vendor in their place. So just keep in mind that these are some of the pitfalls you're going to run into with doing it yourself. Okay. So let's talk about some examples of these kind of accounts. How many of these vendors do you want? You're going to want a total of 5 payment experiences. A payment experience is the reporting of an account to a reporting agency. So if I get an account that reports to Dun & Bradstreet, it's a 1 payment experience. If I get an account that reports to Dun & Bradstreet, Equifax, and Experian, it's 3 payment experiences. And that gives you an idea of a shortcut here because if the key to building business credit quick is to only apply for credit you're going to get, okay? Know that you're going to get approved before you apply. And the second big advice with business credit building is to make sure you get credit with vendors that report to multiple reporting agencies. And by doing this, it helps you expedite the process because I don't need to go get 5 new accounts to get to tier 1, to get to tier 2. I just need to get 5 payment experiences. So if I can get that with 2 accounts or 3 accounts instead of 5, then it gives me a huge advantage, okay, than what it would if I was actually working with one that reported to multiple reporting agencies. So let me give you an example here of what I mean, okay? So for example here, if we look at, I'll give you real examples as we go through this right now. Okay, so I'll give you a handful of examples, but that is the problem, is you've got to make sure that you know where they report. If you don't, it costs you a considerable amount of time to try to even get the right result. Not seeing anything. Okay, so I'm not sure. Jamie, I think you're having a problem not seeing anything, but everybody else looks like they're able to see everything. So you might want to get out, come back in the stream. Would be the best advice I can give you. What's up from Las Vegas tuning in? What's up from Arlington, Texas tuning in? I appreciate that as well. And when we talk about fundability, I'm going to throw this up as well. And Boynton Beach, Florida, thanks for coming in as well. And Big Thrill says, what banks or institutions would you recommend for max funding with personal guarantee? There's a program called Credit Line Hybrid we can help you with, Big Trill, that will help you with that. And the reason I say, you're asking what banks or institution will give you max funding with a guarantee. Credit Line Hybrid is a stacking. It stacks about 5 credit lines on one, and that's how you get max funding. So the answer is you can give us a call, 877-600-2487, or do more research to Credit Line Hybrid online. That is the answer to your question. There is no institution or bank that will give you max funding. How we found to get max funding is to stack them. So to get multiple credit lines and stack them into one. So all of a sudden you get approved for 5 credit lines instead of 1. That's how we found is the best way to get maximum funding. It's not from a source. It's from a handful of sources, because when you do that on the revolving credit side, they all kind of want to compete to be the highest approval. So when you get all 5, you can really go back and solicit them all for increases. And you'll typically see 2 to 3 of the 5 will even then raise your limit even higher than that, because they see other credit issuers that have given you credit and they want to be the highest. That's a complicated answer to a simple question, but that's why you follow us, right? To know that stacking credit lines gives you way more money than just trying to get one from one bank or one institution. So let's talk about some of these. So Granger, they sell hardware, power tools, pumps, and more. They report to Dun & Bradstreet. And if you don't have established business credit, well, then they may want other things like income docs. If your fundability is not established, they'll give you terms ranging from net 30 to net 90 days, which gives you 30 to 90 days to pay back that money. Okay, here's exactly what it takes to get approved. You need an entity in good standing. You need an EIN number, your business address that matches everywhere online, your DUNS number, a business license if your industry needs one, a business bank account, and you've got to be registered with the Secretary of State later than 60 days. Now, if you look at this and say, okay, now I know exactly what it takes to get approved, you can see how much easier it is to get an account when you know the underwriting requirements versus one where you're just shooting in the dark and you have no idea whether or not you'll get approved or not. Plus, it helps you to know where they report, because by knowing they only report to one, you know you're getting one payment experience and not multiple, okay? And you can apply online or over the phone with them. Now, if we look at Uline, for example, they sell shipping supplies, packaging, industrial supplies. They report to both Dun & Bradstreet and Experian. Okay, and you've got to create an account with them first in order to be able to come and get approved. They'll give you net 30 terms. And here's their underwriting requirements: entity in good standing, EIN, address that matches everywhere, DUNS number, business bank account, business phone number listed in 411. And their credit department may require that you place a few prepaid orders if you don't get your fundability in line first. So let's talk about this. Here's the business finance suite that we use for our clients to build business credit. You can see that everything I just told you these credit issuers need, we address in fundability, right? Okay, your entity's got to be in good standing. We do in step 1.1 or 1.3. You got to have that EIN. We do that in 1.4. You got to have that DUNS number set up, which we actually do here in step 2. You got to have that phone number listed in 411, which we do in step 1.5. Business license 1.7, business bank account bit 1.8. So as I said, the reason I'm showing you this is that our clients, when they go through a process that's 3 years and condense it to 6 months, they're doing exactly what I'm showing you here. They're building all the fundability points first. Then they already know they meet the requirements. Then they can go to these tier 1 vendors and know they're going to be able to get approved. Then when they're getting these accounts, and these are tier 2 vendors, not tier 1 that I'm showing you, but it's easier to do so because they know that get-go is going to be more valuable to them than Office Garner, because GetGo reports to D&B and Experian, and Office Garner reports to Equifax. So let's talk about some that are a little bit more familiar for us. So Office Depot is a great tier 2 vendor because they report to 3 credit reporting agencies. Well, Quill isn't as good because they only report to D&B. So again, this is why knowing where they report helps you expedite business credit building. The same as this does. By knowing the exact link you go to apply, where they report, the terms that they provide you, as well as the exact underwriting requirements, it's just way easier to get approved because you're only ever applying for credit you know you're going to get. And you're only applying, well, you can choose to apply for credit that reports to multiple reporting agencies versus one, because it expedites business credit building. Actually, I'm going to give you some hacks right now. I'll tell you exactly how we do it. How we take 3 years of business credit building to 1 is done in about 5 to 7 different ways. I'll show you right now. First, we build that fundability. We don't skip steps. We make sure every one of our clients builds the fundability so they meet credit issuing requirements before they apply. The second thing is that we tier the levels of credit they're going to apply for. So our clients know the exact tier of credit to apply for, and also know how many trade lines they need on their payment credit reports to even get these accounts. We also gray out ones they can't get. You can see this. So we actually say, these are ones not to apply for. Don't apply for these. You're not going to get them. So this way, clients only know which accounts to apply for that they'll get approved for. They see what's recommended and what's not. So they're only applying for what they know they can get, because applying for what you don't know you can get slows down the process considerably. And last but not least, they know the underwriting guidelines for every source. So again, they're only applying for credit they know they can get. So if it really comes down to business credit building, and I could give one of my best pieces of advice, it's only apply for credit you know you're going to get. But even though that's simple advice to give, it's complicated to deliver on, because you have to know the underwriting guidelines, you have to know the tier, you have to know the fundability requirements, all these things before you go into these steps. Home Depot Pro, maintenance supplies, they don't accept virtual addresses, they report to Experian. Net 30 terms is what you get. Apply over the phone or online. And again, not using virtual addresses gives you a huge benefit where you know what to do to get approved versus getting denied. Very similar requirements of what we've talked about before, with the addition that they're going to ask for trade references. They're going to ask for a bank reference or trade references. But the nice thing here is there's no minimum time in business requirements. So if you get your fundability in line, you can come and get this right off the bat as one of your initial vendor accounts. Okay. So this is another really good one that we found to build business credit, is Home Depot Pro. Those are 3 of my favorites: Granger, Uline, and Home Depot Pro. Another one that you might want to consider here is Phillips 76. They sell fuel cards, repair, maintenance of vehicles, fuel. And again, they're a great starter vendor. They report to DB and Experian. If you don't have any accounts on your business credit reports before you get this one, they may want a $500 deposit and a personal guarantee. If you get your fundability in line and some of these other accounts I'm showing you on your report first, then there's a good chance you can get this without a personal guarantee, without a personal credit check. So don't forget that these vendors aren't good for just building business credit. They're good for building your business. So if we talk about a change in the economy, it helps you really stock up on supplies and what you actually need to grow your business. So when it's harder to get those things, you don't have to actually pay that money. And this is one of the biggest mistakes I see people make when they're building their business credit. Is what happens is they come in and they're actually coming in and they're getting credit just to move to the next step of the business credit building process. You don't want to do that. You want to really get vendors you're really going to use to grow your business. Because when you do that, you spend money on using those vendors. Then your credit reports show the recent amount of credit you've used. They don't show your limits. They show the recent amount of credit you've used. So business credit reports show the recent amount of credit you've used over limits, because to credit reporting agencies, what you're using is more important than your limit on the other accounts. What I mean by that is when I get to a tier 2 vendor, let's say Amazon, I want to get an Amazon credit card. Well, if I want to get an Amazon credit card and I've only got vendors that I spent less than $100 on, then there's a good chance the Amazon approval I get might be for $1,000 or $2,000. But I guarantee you that if you go and get Amazon after you've used starter vendors where you're spending $1,000 to $3,000 on those starter vendors, Amazon will almost always give you a $10,000 approval or not. So what, or higher. So what's the difference between a $1,000 Amazon approval and a $10,000 Amazon approval? It's what you did before you applied to Amazon. Did you get credit accounts that they see that you're using and spending money on or not? If you're not spending money on these starter vendors, then what happens is they're not going to give you future higher approvals. So get vendors you're actually going to use to build your business credit and build your business. That way you're using them and you'll get higher approvals from that as well. Plus, being able to get these products and services on terms helps you avoid all the stuff we're seeing right now, right? It helps you kind of overcome inflation where the prices of things that we're buying are going up. It helps you overcome supply chain issues that we're all experiencing, which again is contributing to higher prices. It helps you stock up on things before things run into supply demand issues, right? It helps you get things before inflation gets worse, even though it's the worst it's been in 30 years, to be able to not pay more money on the products and services you're buying. So it actually helps your margins because you're using business credit to buy things before the prices are going up due to realistic things that we're running into, supply chain issues and inflation right now as well. Okay, so they really help you prepare for the future as well as building your business credit and secure your ability to get more money, right? So it's a win-win in that situation as well, okay? Big Thrill says, yes, I'm aware about stacking approvals for funding, but I guess my question was, what institutions are more lenient on the business side with funding? I'd have to explain that a little bit different because the leniency is a very loose term. And what I mean by that, Big Thrill, is that when it comes to lenders giving you money, there's really 4 different kinds of main lenders. You've got ones that will focus on just your cash flow and will give you money on that. And they're lenient if your credit's bad, your collateral's bad, or you don't have collateral. There's ones that will lend you money because you have assets that could serve as collateral, and they're more lenient when it comes to credit issues or not having cash flow. And then there's a third type, which will lend you money based on credit, and they're more lenient about you not having cash flow and more lenient about you not having collateral. And then there's that fourth kind, which isn't lenient at all. They need you to have good credit, cash flow, and good credit. And there's really very little leniency for those at all, which are like SBA lenders. So lenders are lenient in a lot of areas if you have one lendable strength. And when it comes to business credit building, again, they're more lenient the more trade lines you have on the business credit report. The easier it is to get future lending or credit approvals when you've got more trade lines established. So very detailed answer. Hopefully that helps you there. And Jamie says, I can now thank you. I think I was just behind. Okay, no worries. Marcel says, just returned your voicemail. Hey, thanks. I appreciate you giving us a call back. I'm obviously right here, so I can't call you back right now. So that being said, step 3 of business credit building. Right? Step 1 is fundability. Step 2, set up with the reporting agency. Step 3 is you've got to get these initial starter vendors. You've got to get vendors that will extend you terms and report the credit to the business credit reporting agencies when you make timely payments. It's how you establish initial business credit. And in doing so, this is what will give you the foundation to move to the next steps of business credit building. Now, in the next training next week, we're going to talk about most frequently asked questions when it comes to underwriting. A lot of these questions have asked. We're going to be diving in deep and talking about underwriting questions, including what underwriters like to see, what they don't like to see, and what they look at to get the information needed. Where are they looking to get data about you that you don't know they're getting? If we can figure this out and control this, we know what underwriters want, we know what they're looking for, we know where they're looking for the data, then we have a choice to control the outcome. We can be able to give them what they want, create the fundability, create the business and structure that they want to see. We can also go get the secret credit reports like Check Systems, LexisNexis, Small Business Financial Exchange, and others. We can get the information they have, correct it, update it to be what we want them to see. And all these things radically increase our chances of getting approved for the most money. That's exactly what we're going to be talking about next week. If you'd like to talk to us about it before then, give us a ring at 877-600-2487 or just schedule online at creditsuite.com/consult. When you schedule a consultation with us, we'll do a fundability check. We'll tell you what you need to fix on fundability to be able to get more lendable. I can't tell you how many people we helped fix one fundability item and they went and started getting approvals for credit and financing when they were denied previously. So we can help you figure out what's wrong or what to fix. We'll also give you tips and tactics to improve your business credit. If you think you have established business credit now, we'll get your credit reports. We'll help you get them for free. They cost $250 in the bureaus. We'll get them for you for free. And then we'll give you advice on what you need to do to improve the business credit building. And if it looks like you can qualify for loans or credit lines, we'll talk to you about all the financing that you're able to get right now. All happens on a free consultation, 877-600-2487. You can also go to creditsuite.com/consult in order to get approved. And if you got value from this training, hit the like button, please. That's all I ask. Hit the like button, hit the love button. Okay, please. I got a love thing. I think it's a love thing where the person's holding a heart. That's fantastic. That's care. Thank you. So I see this in real time. We put a lot into giving you all this information. All I ask is if you got value, hit like, hit love, hit share so we can help more entrepreneurs, because I'm in this to help more people. And I guarantee if you're in business legitimately from the heart to help people, you're going to succeed way more than if you're in it for the wrong purposes. So help us help more people by liking, sharing, and just follow us on our other social channels. The top right of our page, creditsuite.com, you can access our social channels where we give daily tips on Twitter, Instagram, Facebook. We have thousands of videos on our YouTube channel. We've got 1 minute tips, 1 minute instead of 30 to 45 minute video trainings, 1 minute tips on our Insta stories, on TikTok as well, that can help you with a lot of different things. We take the questions you ask, we put them into 1 minute answers and put them on TikTok and Insta. So you get that. And we got a podcast, the Business Credit Financing Show, that has 500,000 downloads, very popular, where you can listen on the go. And we have experts come in that will give you insight on running your business as well. Okay. And Willow, funding consultant, says, I did not give WEX 76 papers showing proof of office address and Secretary of State. So now I have to put up $500. Okay, so this is a very real problem. So what's happening here is this. Remember, when it comes to Phillips 76, I said, first of all, you got to have all your fundability online. And they're going to want to see some accounts reported on your business credit reports. If they don't see those two things, as I mentioned, when I mentioned them, they will ask you for a PG and a $500 deposit. How do you get around it? You do those two things. Something's wrong with your fundability, or you don't have accounts reporting to the business credit reporting agencies, give us a consult. We'll do a fundability assessment. We can look at your business credit reports to figure out the root of that problem and even correct it. Okay. And, also, if you're interested in becoming a business loan broker, my team just reminded me, here's a link if you want to offer business credit financing as a service. Next Tuesday, we're doing a training on that. And you can jump in right here, take a screenshot of this link. If you're interested in being a partner, interested in being a business loan broker, here's a link to that training. I'm What? Good morning. Thanks for coming in from Facebook and saying hello. I really appreciate that as well. And Louisiana, Shreveport's in the house as well. What? Thanks for coming in and saying hello. So I'm going to go ahead and wrap this up. Don't forget to give us a call for the free consultation. On the free consultation, we can do a fundability check. We can do a business credit check. We can do a financing check for you as well. All you have to do is give us a ring at 877-600-2487. I'm going to go ahead and wrap this up. Thanks for tuning in. Tuesday, we're actually going to be talking about how to become a business loan broker, how to become a partner, how to offer business credit financing and service. And then Wednesday, I think we get into the next topic we'll be talking about with underwriting guidelines. Looking forward to seeing you on those training. Thanks for tuning in. Have a great